Hey everybody, Smart Silver Stacker here. Hope you're doing well. So today we need to take a look at a pattern that is forming on silver's chart, because the last time the silver price did this, it rose by about 31% in a period of just 11 weeks. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. All right, so the pattern I am referring to is illustrated on this chart right here, and we're talking about the rally in silver that started back in February of 2024. And what I want to draw your attention to here is this Elliott Wave 5-wave impulse move up, where silver did this. It went 1, 2, 3, 4, 5, and then it topped out here in May of last year. And then what we got was a classic reversal pattern, a correction following an Elliott Wave 5-wave move higher. We got this ABC correction. So you can see the correction here, A, B, and C. And the silver price bottomed out in August around 26.44. Now that set us up for the next impulse wave higher, which is what took us just like this, 1, 2, 3, 4, 5, all the way up to just under $35 in October of last year. And that move up, that was a move of about 31% from the lows in August to the highs in October. And you'll notice also that this yellow line, which represents silver's 200-day exponential moving average, that is the line that the silver price touched down to before it began the big move higher. Also, there is this descending wedge pattern on silver's chart that it broke out of, which then we saw the price rise to almost $35. Now over here at Investopedia.com, you can see this is a downward falling wedge pattern. And you can see this is typically actually a bullish setup when you have these downward moving converging trend lines. And that is exactly what we see once again on the chart of silver. You've got this downward sloping trend line and this one, and they are converging. And it looks like silver actually just broke out of this pattern after completing an ABC correction from the October highs. And also it touched down to this 200-day exponential moving average, just like it did back in August before it took off to the near $35 level in October. So I think what we're being set up here, if history repeats, is another move now to new highs above $35. Now, it's not going to be a straight line up. It'll probably be another one of these 5-wave impulse moves higher. You know, we're going to get a 1, 2, 3, 4, 5. But if history repeats, this should take us over $35 an ounce. Now, tomorrow, the Fed is meeting with their FOMC meeting and their interest rate decision. What they're going to do with interest rates will be announced tomorrow, followed by a press conference. Now, if we take a look at the CME FedWatch tool here, you can see that there's very little anticipation of a rate cut. So right now, the federal funds rate is 425 to 450. It's probably going to stay that way. It all depends on what comes out of the mouth of Jerome Powell at the press conference following the interest rate decision, because it's not up in the air whether they're going to cut rates. It's almost a unanimous consensus that they will not be cutting rates tomorrow. But if Jerome Powell remains, let's say, neutral, then the technicals could propel silver higher here. Or if he comes out and he is dovish, if he says that maybe there's more room for interest rate cuts, maybe he'll be influenced by Donald Trump's recent statements at Davos that, you know, Trump said he was going to try to force lower interest rates. So maybe Powell's not looking for that fight. Powell may also adopt a bit of a dovish tone tomorrow in order to throw markets a bone, following the significant sell-off that we witnessed yesterday, sparked by the Chinese DeepSeek AI model. Maybe he'll come out somewhat dovish. If that's the case, that could really put a fire under the silver price. Now, the other alternative is if we get a hawkish Powell tomorrow, that could see perhaps a bit of a drop. Maybe we'll touch the 200-day moving average again, but the technicals are in such an alignment here that I suspect that even a sell-off following a hawkish Powell will only be a temporary correction, and then we will be, again, because of the technicals, set up for a rally to new highs. Certainly the other fundamentals, the constant devaluation of the currency, the massive deficit spending, the huge debt, the silver deficit in the physical market, all of these things align for higher silver as well. But when we look at the chart here, it looks like that may not be far away. I mentioned this in my newsletter that went out today. I did a write-up on this chart. If you're interested in receiving those, or if you'd like to get a copy of this is a free report that I put together called the Smart Stacker's Guide to Avoiding Costly Silver Bullion Mistakes. This report is about 5 pages long, could save you a lot of money. If you're interested in seeing technical write-ups about silver, or you just want to get this free report, then sign up for my free e-newsletter. There's a link down in the description. And when you get your welcome email, it's going to have a copy of this free report. And also you will see emails in the future like the one I sent out today regarding silver's chart. And it's 100% free. And I suggest anybody who enjoys these videos, who watches this channel, who subscribes and supports the channel, sign up for the free e-newsletter. There's a lot of valuable information in there, and you will get this free report, which could save you hundreds, maybe thousands of dollars if you avoid a costly silver bullion stacking mistake. Hey, let me know what you think about the chart. Let me know what you think is coming at the FOMC tomorrow, because it certainly looks like it's about to get very interesting in the silver market. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker out.